YouTube, what's going on? This is TerrenceRe, and this is the stock market update version of What Am I Trading? And this is the second week that I'm doing this particular show like this. I'm gonna be coming to you every Thursday, 3:30, so you can set your clocks and set everything. So that way, subscribe, hit the like button, share it, and then that way you'll know. Make sure you hit that little notification bell so you'll know when I'm coming on. And I'm gonna talk about what trade I have on and what trade that I'm thinking about putting on, and maybe even put on during the show right after the buffer. So right now we got the S&P futures up about 0.75%. Look right over here at my watch list. I'm reading from top to bottom. I'm just skipping over volatility. Nasdaq futures up about 1.25%. We got the Dow futures, basically up 0.25%, almost flat, and then the Russell is down a couple handles on the day. If you look, you see the red, the Russell, and you can see that vol is, it's contracted maybe 1%. If we're looking at the VIX futures, the VIX itself is down 79 cents. So we got a pretty much, to me, this is a flat day. And I'm gonna show you pretty much what I expected today, and I'm gonna show you why. As we're gonna take a look at the expected move for the SPX, which is the option market for the S&P 500. The bonds are up, and you see the TLT. So if you've been following me over the past few months, you'll know that I am long bonds overall in my long-term portfolio. So because bonds have been, if you look at the TLT, you can see how it's been beaten down, and you can see I got targets over here, Fibonacci targets. So you can see this big green candle today. This is what we have. Let me move this out the way. So we're gonna make this screen a little bigger so you guys can see. If you look over here, this is today, and you can see this big green candle. So what I'm anticipating is a breakout over this area right here, and we should get something. It'll fill in this gap. You got a gap right here. So I'm anticipating filling in that gap and getting up into the 120 level, within the next week or so, maybe a next couple. The bonds don't move like really, they don't make big moves. So it's possible that it could do it in the next week or so, but it could take a couple weeks. Um, but the final price target is all the way up here around 128, which I could see it doing that. I'm not gonna trade the bonds right now, like as far as trading, just because I am bullish and it is up today. So I wouldn't want to get long into get long into an up day, right? I would want to get, me personally, I want to get long when the market is down, and then I want to get short when the market is up. Now let's take a look at the SPX S&P 500. I'm gonna pull that up. You can see I already got, if you guys pay attention to the show, I put these lines on here. I think I may do it live tomorrow. So like I said, make sure that you subscribe so you know when I come on tomorrow, depending on what time. I won't do a set time tomorrow. It just depends on, how the day is going. But I did this last week. Here is the weekly expected move for the week. And I get that from the option chain. So if I come to the trade tab, and you can see today, with today being Thursday, so with one more day left on this trading week, we still got 33 more dollars that the option chain is saying that the SPX can move up or down, right? So I do this every week. So it's already on the week moved the amount that it had when I did it for last, I did it last Friday. So we're already up against that level. And if you see, we have a gap right here. So it looks like price action is attempting to fill that gap, right? So what I have on right now, I did it in the SPY, which is a little smaller than the SPX. So you can get a little smaller. So I did a trade here. I actually put this on, I want to say maybe earlier this week. I don't know what day, but I have a call spread. So I am taking a short position in the short term. So this is the August 19th expiration, 29 days. I sold the right here. I'm at 403. I'm short here and long here at 408. $5 wide spread. And I think I took in 164. But you can see I'm down on the position. Right now it's trading for 213. So I'm down about 30, about 40, 48, 47 bucks. Right. But I'm expecting at any moment for the market to turn and for me to get a down move. Well, I expect that doesn't mean that I'll get it. If we come back and we look at this chart right here, you can see if I come down to the 30-minute, let's take a look. You can see it went right up there, kind of bounced around, went here. And this is where we've been pretty much all day, right up there at that expected move range for the week, right? And we can see like right here where we are down, where it came down and touched around this level. So these levels right here are going to work for me as ranges that I want to trade around. Once I get up around that level, I'm looking to get short. Now, I don't to make money on that trade and to take my 50%, I want to take maybe if I collected in premium of 164, that's 164 bucks. I would look to buy it back maybe around anywhere between 80 and 90 bucks, maybe 100 and pull $60 out of it. All I need is a little sell off back down in the maybe 3,900, probably not even that. And then I could pull out and get out of this trade. I do feel like at some point we'll come down and fill in these gaps. Got a gap here and you got a gap here. And with earnings, with some of the big earnings still left to come out, that'll be very easy for that to happen. We still got earnings on Apple. I had to look and see when it is, but Apple can make it move. Microsoft, Google, those particular stocks will make the market move. So now let's take a look at one of the stocks that I want to take a look at that I was thinking about putting on. Let's see if we can work out a trade in the XLE. XLE is down on the day, right? It reached the top of the Fibonacci air zone that I had. And you can see right here, it got up into here, chopped, and then we gap down. So this is something that I'm expecting the SPY to do at some point, right? So with that being said, what would be a good range? Um, what would be a good trade for me looking at this? Since I missed this up move and I missed this down move, maybe it'll just chop around for a while. Who I don't know. But we got a 60 IV rank. So something that could possibly be done is maybe an iron condor. I was looking at doing um an iron condor would be something like maybe coming, maybe selling the expected move, right? So we got this little ruler area that this is something that as far as I know is only on Tastyworks. As far as them putting this, they have a specific way that they do their the expected move. And so if I came here and maybe sold the 65, maybe bought the 62, then maybe sold the 78 and bought the 81, maybe collect 93 bucks. I could move it in if I want to collect a buck, collect a third of the width of the strikes. You could do something like that. If I want to collect more premium, I could move it out further. Let's just say I wanted to make it $5 wide, but I still wanted to collect. That's $5 wide, not quite a buck. I'm going to move it in. See if we move it in on the downside. We're at 98. We got a 70% pop. Now, the more you move it in, the more risk you take, you collecting more premium, right? So you see, got a 68% probability of profit, 81% or 83 of keeping 50%. this, which would be maybe about 55 bucks. So that's something that I'm modeling, that I'm looking at. That's a trade. Or you can just take these. Now this right here, this form of trade is an iron condor. Let's look at this in the analysis tab so we can break down what it looks like. Move this over. And as you can see, this is what an iron condor would look like on the analysis tab. And what I'm showing you here is, meaning I just need for the next 29 days, I need price action to stay inside of this range. So there are trades that you can do where you do not have to pick a side. Like, we don't necessarily have to be, if you watch TV, it's always about buying, where can you get in? I've been watching, today I've been watching different news programs and financial news programs, and it's about telling the investor, like, where can you buy? Is this a great area to buy? And you don't always have to buy. You don't know you don't necessarily always have to sell. You can hold your position and do other things around it, things that you can do strategically. And so if you don't have a bias, and you're not really sure where it can go, take a bet that it may stay where it's at within that range. Right? So this particular trade is telling me that, hey, I got a 68% chance of getting paid here. And if instead of trying to get all of this 108, if I just try to aim to get half within the next 29 days, I can possibly make 82%, right? So this is something that these are different trade tactics that you can do, um as far as like being diversifying your trade strategy, right? I know you've heard diversifying like your portfolio, but you can diversify your trade tactics as well. You don't have to get long or short. You can be neutral and get paid as time decays and volatility begins to contract, right? So this is something that I am looking at. Hadn't quite made up my mind if I'm pull the trigger on it or not, but this is, and if you move up and down this, you can see it's going to show you like your P&L, and I can move the dates down. I could come over here, pull this out, and then I could go over time, and it's going to pretty much show you like your P&L over time. So I just move this in. Let's say we go down, 14 days, 2 weeks from now. If the market is still right in this area 2 weeks from now, look what you make. That's your P&L, like right there. So it's saying 61 bucks. That's theoretical, right? That's if volatile, so if it's right up in here, 75, you'll be at 35 bucks. You'll be at 24 here. You'll be at a loss if it's around here, but you just continue to hold. So if you hold it to 8 days, so you don't let 20 days pass by. Now look where you at. If it's still around that range, right? So this is how you can these are ways, and you can model it. You can do this on any trade that you put on. Now this is akin to, Tasty Works. There is a link down in the description of the video that you can click on and open an account with them. I think I'll get a little something if you do it. It's like I get like points or something like that, right? So I wanted to show you XLE, and show you possible trades that you can do around that. And if you this is the energy sector. So let's just say you say, Ray, I want to get, I don't feel comfortable doing that. I'm bullish. I think energy is gonna go through the roof. All right, you might do that. You listening to the news and you feel like, some news will come out between Russia, Ukraine, or whatever that could cause another price spike or whatnot. You just come down here and sell a put. Then you can sell the that's the 24 delta. If I was doing that, maybe I'd probably come in here and sell maybe the 67 delta, collect $158, and you see your probability of profit right here. Now, of course, you got to be right directionally. You need the market to stay up, not come below um 67. But really you got 158. So this gray area right here is how much cushion you have past your strike. Like if we're looking at the option chain. So if we looked at this on the analysis tab, let's go back over and analyze this. And you can see, I'm gonna make it bigger. You see right here, this is where the stock is, and it's showing you where you need it to go as of today. And then you can move this forward, and then you'll see this zone move some. So this is where it's at. Your strike is right here. And you can see you don't lose until it comes back and eats up that 158 back in this area. All right. And all I'm doing is rotating to make it bigger so it's easier to see on the screen. Green is where your profit zone is. Red is obviously where you lose money. Another stock that I've been talking about over the past week or so is Boeing. So if you watched last week, I gave out that jewel last week, and Boeing ain't looked back since I put it out there on the chart. Um, we can look at let's pull up the daily chart and take a look at it. I do look, you can look, it's going right to my target. Now I'm already out of the trade. I took my profit, and that's just one of the things. Maybe I should have stayed in it or whatnot. It is what it is. Sometimes I took it off as a winner, and I ain't gonna obviously you might say, well, why you don't get back in? Because so you get back in on a market that's already running away. Could it continue to run away? Yes, right. But um it's a gap right here. See this gap? We're running right into resistance. I mean, we running right into it. So let me see. Let's put a little let's put a little channel there just so I can look at it and see what it's doing. But we right here, it's running right into it. Now that doesn't mean that it could blow right through it. It won't Let's not get it twisted like it can't go through it. But my experience at somewhere in this zone, we're gonna get a little bit of chop, right? Now it could gap and go, but we already got it on an up move, right? Now keep in mind the S&P 500 is right up against resistance as well with the weekly expected move. So I'm expecting a little pullback in these markets at some point. It could pull back into here. Now, who knows? Now, if I get a pullback, a substantial pullback into here, I may look to get long, right, into that down move. So, that's the way I like to play it. However, I will say this. I do think that now that's as far as like trading. Boeing, I do think that Boeing is possibly setting up to be maybe a yearly hold, 2-year hold, or maybe even a 3-year hold. My overall forecast for Boeing is all the way up here at maybe 230. It's possible. I don't It may not get to that level, but it is possible. That's one of my Fibonacci zones. Another zone is right here at 214. May be kind of hard to see this because of the coloring. Let me see. So if you look at it while I got it clicked and highlighted, that's right around 214. A level here is 186. And then the next level is 169. Excuse me. So I could definitely see Boeing at least getting to maybe 169.15, somewhere right around in this area. And if I was to take this blue highlight, and draw it all the way over, you can see right here where this support, so the market came here and bounced. That support bounced here, then became resistance right here. So we're right in that area. So that's why I've already taken profit on it. If we get some sort of a pullback, then possibly maybe we could get long after the pullback. But I'm not interested in getting long right here at this particular moment. So Um, I'm gonna let the market move a little bit, and then I'll take a look at that. So, right now, what like I said, I like Boeing long. Um, I like the bonds as far as like just being long and trading the bonds. The bonds is a valuable product to trade. I do think we're gonna get a pop right here. So I think I said earlier I didn't want to do a to get long, but maybe a neutral kind of a trade after it makes that high may not be a bad move. Maybe something like an iron condor in here may have to do to get paid, may have to go five wide, maybe sell the 125. I would skew this because I am a little bullish. So instead of going equal distant, maybe do something like sell the 113, buy the 108, and I'm collecting. So maybe something like that. I like that, right? So I'm still bullish, right, to the upside. So I'd almost I'd be up here right around one standard deviation to the upside, and then keep that right there to the downside, or something like that. That's not a and I can always play around with it to get, to collect the amount that I want to collect. And so that's what's on my board. TLT, XLE energy, and then Boeing, and then the SPY in the short term. I'm looking for a little bit of a pullback, right? I want to see right here with the SPX, we right up here against the weekly expected move. Maybe it fills the gap and then we get the pullback. So if you're saying what will I do if I'm tested up here, which is very quite possible that tomorrow somewhere around there we could get a big move and I could get tested into here, then more than likely what I'll do, depending on how close it gets, if it gets right around here, I may just roll out in time, buy these back, and then roll out to the 57 day, or I'll just hold it. I might just hold it. It's a defined risk trade. You put the trade on, and you got to be comfortable with the loss. So I got 29 days, even if it comes up here, in order for it to pull back, and then we'll see what happens from there. Hopefully, you guys got something out of it. If there's a particular stock that you want me to look up, put it in the comment section. Give me some feedback. Let me know what you like, what you don't like. Um, like I said, give me a stock that you looking at. Um, you know, follow me on Twitter because sometimes I'll just post a chart on Twitter and I may not have time to do a video. And so it may be a trade setup, it may be something I'm trading. Sometimes I just post trades sometimes on YouTube in like the post section. So you'll see it come up like a tweet in there. And I may not have time to do a video. So that with that being said, guys, be comfortable with your risk when you put the trade on, and no reward without the risk, right? So with that, guys, I'm out, man. Peace.